Most people have never heard of the copper-gold ratio, but it's one of the most consistent macro indicators of where we are in the business cycle. And right now, it just hit a multi-year bottom and is starting to turn. That's a big deal because every major Bitcoin bull run has followed the same pattern. The copper-gold ratio bottoms, confidence returns, and Bitcoin explodes. Here's the simple idea. Copper is the metal of growth. When investors expect industrial demand, such as construction, autos, or infrastructure, they buy copper. Gold is the opposite. It's a counterparty-free, safe haven asset. It rises when people are scared or worried about inflation, debt, or geopolitical risk. When the copper-gold ratio is rising, it means capital is rotating toward growth. That's a strong macro signal, and it's the environment where Bitcoin thrives. You can see this clearly in this chart, which shows how each time the ratio turns higher, it's followed by a powerful Bitcoin bull market. In late 2011, copper started to recover from its bear market low. The copper-gold ratio climbed until the end of 2013, peaking about 32 days apart from Bitcoin's cycle top. The same relationship showed up again in 2016, when copper began another strong recovery after years of weakness. The ratio rose steadily, and that same year, Bitcoin climbed from 4,000 to over 1,000. As copper kept outperforming gold, Bitcoin went parabolic, reaching 20,000 by the end of 2017. The copper-gold ratio peaked only at 12 days from the 2017 cycle top. That same thing happened in 2020. As the world came out of lockdowns, copper exploded higher, and Bitcoin surged from 5,000 to 69,000. Once again, the copper-gold ratio peaked within 60 days of Bitcoin's 2021 cycle top. When the ratio peaks, Bitcoin begins to struggle. In 2018, copper rolled over and gold surged, signaling macro fear and a slowdown. Bitcoin fell over 80%. In 2022, the copper-gold ratio dropped again during a tightening cycle, and Bitcoin fell again. The copper-gold ratio is a macro confidence gauge, and Bitcoin responds directly to those shifting tides because Bitcoin responds to global liquidity. Now, in early 2025, after a slower slide through 2023 and 2024, the copper-gold ratio has hit record lows in Bitcoin's existence. That kind of pessimism historically marks the beginning of a parabolic Bitcoin bull market. If copper starts outperforming gold in the coming months, that will indicate rising confidence and a likely return to risk-on behavior. That's when Bitcoin moves higher, as it means global liquidity is expanding. We can continue to watch this metric over the coming months and see if the correlation remains tight. Thanks for watching, everyone, and see you next time.